All right, guys, we are looking at US CMA Part 1, and in US CMA Part 1, we are looking at cost management. In cost management, the unit in some publications can be given as unit 2, in some publications can be given as your unit number 4. Essentially, we are looking at cost management, and in cost management, we are looking at the topic of full absorption costing, that is, a comparison of absorption costing with marginal costing. In the course of this discussion, we are going to look at MCQs from this particular unit, and we are going to try to discuss all the possible MCQs and the concepts along with it. Everybody who is going to be practicing MCQs for this particular unit needs to pay attention to everything discussed in this lecture and also try to take down notes. Question number 1 is, which of the following correctly shows the treatment of factory insurance, direct labor, and finished goods shipping cost under absorption costing and variable costing? Variable costing is nothing but marginal costing. Now, the concept is very, very clear that under absorption costing, we treat all the fixed manufacturing overheads as a part of cost of production. What happens because of this is that the inventory of finished goods under absorption costing possesses or comprises of the fixed manufacturing overheads. So when I speak of absorption costing and I break down my costs under two parts here, known as product cost and period cost, what happens essentially is this, that product cost will comprise of all the variable manufacturing overheads, and it will also comprise of all the fixed manufacturing overheads, whereas the period cost will comprise of all the variable and fixed non-manufacturing overheads. It is essential to note that in absorption costing, all the product costs will include manufacturing overheads, both of variable as well as fixed nature. But when I deal with the period cost, I am dealing with both the variable as well as the fixed non-manufacturing overheads. Now, when I look at this particular question, I see on the screen three examples. The first item that I see on screen here is factory insurance. Now, factory insurance is a fixed manufacturing overhead. Next I see here is direct labor, and direct labor is a variable manufacturing overhead. And third I see are finished goods shipping costs, which are nothing but selling and distribution overheads. So if I was to categorize these items, please try to understand, in absorption costing, I am looking at variable manufacturing overheads, which comprises of my direct labor. I am looking at my fixed manufacturing overheads, which will comprise of my factory insurance. However, finished goods shipping cost are a selling and distribution overheads. They are not at all concerned with the manufacturing. Therefore, the finished goods shipping cost automatically becomes a period cost. So, if I was to write down finished goods shipping cost, what does it become? It becomes a period cost. So as far as absorption costing is concerned, as far as what is concerned, ABS means absorption costing. As far as that is concerned, when I was to look at product, under product, I will obviously put my direct labor, I will also put my factory insurance. I will also put in my factory insurance. But when it comes to period, selling and distribution are non-manufacturing, therefore they become period. So my shipping cost go into period cost. But marginal costing is different. What does marginal or direct costing say? Marginal costing or direct costing says my product costs are only and only going to be my variable manufacturing overheads, whereas period costs will comprise of number one, the fixed manufacturing overheads, and they will comprise of variable as well as fixed non-manufacturing overheads. So a quick revision of the concept, if I was to put across to you and put it in the form of a chart, this chart would look something like this. Please pay keen attention to this chart. I am saying in this chart, as far as absorption costing is concerned, when I look at my product cost, I take into consideration all my cost of production, and under absorption costing, cost of production can be both variable as well as fixed, but they have to be what? They have to be manufacturing costs. The period costs, very simply put, are my non-manufacturing costs, which are going to comprise of the broad bucket of selling and distribution and administrative overheads. So this is the concept. In the question, they asked you direct labor. Direct labor is a variable cost of production, and they asked you fixed with respect to your factory insurance, which becomes a fixed manufacturing cost. So both direct labor and factory insurance under absorption costing become product costs, whereas shipping cost is nothing but a selling and distribution overhead, therefore it becomes a period cost. Now, when I look at marginal costing, if I break them down into product and I break them down into period, please try to understand that my product costs are all my variable manufacturing overheads, and in our question the only variable manufacturing overhead is direct labor, whereas when I talk about period cost, they will be fixed manufacturing as well as variable plus fixed non-manufacturing. Therefore, all variable selling cost, all fixed selling cost, all variable administrative cost, and all fixed administrative cost under marginal costing will become period costs. Now, please try to understand one concept very, very clearly. Whether it is absorption or whether it is marginal, they are common with respect to what? All your non-manufacturing costs, whether variable or fixed, they both become your period costs. The problem is that in absorption costing, your variable manufacturing overheads as well as your fixed manufacturing overheads are treated as product cost, but under marginal costing, only variable manufacturing overheads are your product cost, whereas your fixed manufacturing overheads, they automatically become a period cost. So this is something you need to be careful about. So if I was to make a list of certain items, for example, if I say direct material in itself is a variable cost. So whether it is absorption costing or whether it is marginal costing, in both the places it will be a product cost. Then when I talk about direct labor is again a variable cost. It will be product under both marginal as well as absorption costing. If I speak about direct expenses, which are also variable in nature, they will be product costs under both absorption as well as marginal costing. But when I speak about, let us say, indirect materials and items like indirect labor, if they are variable, only then they will become product costs under marginal costing. If the indirect material is fixed, it will become a period cost. Now, when I look at items such as, let us say, factory rent, factory depreciation, factory insurance, production manager's salary, both these items are example of fixed manufacturing overheads. Under absorption, they continue to be product cost, but under marginal, they will become period cost. And when I talk about variable or I talk about fixed, selling and admin, under both the items, they will become period cost. The only great difference arises in the treatment of the fixed manufacturing overheads, where if I talk about your fixed manufacturing overheads, then if I'm talking about absorption costing, they become a product cost. But if I'm talking about marginal costing, they become a period cost. This is the most important concept that question number 1 of our Apex LMS delivers to us. If you are watching this video, your job right now is to pause this video and copy down this working that has been presented in front of you. This working need not be memorized. This can be seen along with your first basic costing lecture, where you have taken into consideration the breakup of variable and fixed costs. If somebody asks a doubt, what about semi-variable costs? Then semi-variable cost will have to be broken into their variable element and their fixed element, and then basis this classification, they will be classified. So for example, if there is a semi-variable cost of manufacturing, both its fixed and variable components under absorption costing will become product cost. But if there is a semi-variable cost, then its variable component under marginal costing will become a product cost, but its fixed component under marginal costing will be a period cost. Now, let's move on to question number 2. Now, what does question number 2 talk about? So, over here, of course, we have to select our alternatives. Now, check out the alternative. Absorption costing, product cost is factory insurance and direct labor, which is absolutely correct. Period cost is finished goods shipping cost. So, if I was to take into consideration this option, up till here, they are absolutely correct. Variable costing, product cost is direct labor and period cost is fixed insurance and finished goods shipping cost. This particular option number A is absolutely correct. Look at option number B. Absorption costing, they are saying product cost is direct labor, which is correct. But under absorption costing, factory insurance cannot be a period cost. It has to be a product cost. Therefore, option B is wrong. Option C, absorption costing, product cost is factory insurance and direct labor and period cost for finished goods shipping. So for absorption, they are absolutely correct. For variable costing, they are saying product cost is factory insurance and period is direct labor, which cannot be so, because under variable costing, that is marginal costing, the period cost cannot be a variable cost. It has to be a fixed cost, and they have made a mistake by putting factory insurance, which is a fixed cost, under product cost, whereas it should be written under period cost. Therefore, option number A is the right option. Now, moving on to question number 2. Question number 2 is a very interesting question which speaks about the breakups with respect to the valuation of the inventory. Let's take a look at question 2. Chasen Company, a cracker and a cookie manufacturer, has the following unit cost for the month of June. Variable manufacturing cost is $5. Let's do one thing. Let's put this down. Now we are looking at question number 2. Now we have variable manufacturing cost, which is $5. We have variable marketing cost, which is $3.50. We have fixed manufacturing cost, which is $2, and we have fixed marketing cost, which is $4. Now let us see what happens in the question ahead. A total of 100,000 units have been manufactured during June, out of which 10,000 units remain in the ending inventory, that is closing stock. Chasen uses FIFO method for inventory valuation, and the 10,000 units are the only finished goods at month end. Using full absorption costing method, what will be the value of the inventory? Now, if I was to apply full absorption costing method, please try to understand that under absorption costing, abbreviation we are using for absorption costing is ABS. Under absorption costing, closing stock of finished goods is valued at variable as well as fixed manufacturing cost. So in this scenario, it will be $5 of your variable marketing cost. So I'll put down over here 5, as well as I will take into consideration the fixed manufacturing cost. So I'll put down over here 2 multiplied by 10,000 units of your inventory. Therefore, your closing stock valuation under absorption costing becomes $70,000. However, if this was under marginal costing, now they have not asked you this in the question, but we are certainly going to take a look at this. Under marginal costing, only your variable cost of manufacture is considered. Therefore, under marginal costing, I will consider only 5 per unit and multiply that by 10,000 units and say that my finished goods closing stock is $50,000. Therefore, now if I have to check out the answers given in the options below, what is the value of my closing stock? It cannot be 145. 145 will be an absolutely wrong answer. Cannot be 85. It is 50 under marginal costing and it is 70 under absorption costing, and the question is asking us to solve by full absorption costing. Therefore, our answer is option number D. This is a very important concept that we need to take into consideration when we are doing absorption versus marginal costing. We now move to question number 3. Now, what does question number 3 talk to us about? Question number 3 talks to us that West Company 2001 manufacturing cost are given to us. Direct material and labor is there. Other variable manufacturing cost is there. Depreciation on factory building and manufacturing equipment is there. Now, what would I do is, I would list down direct material and direct labor as variable manufacturing cost. Of course, I have my other variable manufacturing overheads. They are also of a variable nature. Then I take into consideration my depreciation on building of factory and manufacturing equipment, which is my fixed nature manufacturing cost, and then I have with me other fixed manufacturing overheads. So all of these items that I see are either variable or fixed nature of manufacturing overheads nonetheless. They are asking us what should be the product cost for external reporting purposes. This is a very interesting question. Why is this question interesting? Because anybody who is studying these concepts needs to agree and understand that when I am doing external reporting, I have to follow absorption costing. So reporting is of two types. Reporting is of two types. The first type is internal reporting. Over here, you may use marginal, that is direct costing, but when it comes to external reporting, over here absorption costing is compulsory. Over here absorption costing is compulsory. Under absorption costing, both variable as well as fixed manufacturing overheads become your product cost. Therefore, my total of product cost will be 7 lakhs plus 1 lakh plus 80,000 plus 18,000. The total of this is 7 plus 1, 8 lakhs, and this is 98. So the answer is 8 lakhs and 98,000 under absorption. This is the product cost. So let's look for 8 lakh 98,000, and we find 8 lakh 98,000 as your option number C. As your option number C. For all those of us who are curious, for all those of us who want to know, obviously, when I am looking at internal, I may use marginal costing. In marginal costing, my product cost will only be my variable manufacturing cost. So it will be 7 lakhs plus 1 lakh. Your answer is 8 lakhs as your product cost under what? Under marginal costing, and 8 lakh 98,000 as your product cost under what? Under absorption costing. An important question. So when you are revising this particular concept under your on your LMS, please remember that question number 1 and question number 3 have to be revised together, so that your one concept will become completely revised. Now let's go to question number 4. Question number 4, assuming that the beginning inventory is 0, if a company produces more units than it sells, then net income will be higher over where? That is the question under your question number 4. Now please try to understand. Question number 4 is talking about a very important concept on the basis of which multiple questions are going to appear in your US CMA part 1 MCQ section. Please try to understand. Please try to understand. When I say that my closing stock is greater than my opening stock, then in this scenario, my profit under absorption costing is certainly going to be more than my profit under marginal costing. So for this, there is an interesting chart that I would like to present to all of you. Now, let us say for example, this is only an example, this is for your conceptual understanding. So please pay attention. I am looking at opening stock. Suppose if I say that opening stock is 0 units, my production, let us say, is 1000 units, and my sale, let us say, is 900 units, obviously my closing stock is going to be 100 units. In this scenario, my closing stock is greater than my opening stock. In this condition, my profit under absorption costing will be higher than my profit under marginal costing. This is the concept that has to stay wired in your minds. However, if I was to say that, for example, my opening stock, let us say, is 1,000 units, my production, let us say, is 10,000 units, and my sale, let us say, is 10,800 units. In this scenario, my closing stock is going to be 200 units. How? I have 11 in hand. I sold 10,800. So I am left with how many? 200. Here it is clear that my opening stock is greater than my closing stock. In this scenario, the profit under absorption costing is less than the profit under marginal costing. This particular concept is going to drive your understanding of the next few questions. Here, an interesting question is, by how much? There is a formula for the same. So, if I say closing stock minus opening stock multiplied by fixed manufacturing overheads, this will give me how much is my profit either higher under absorption costing or lower under absorption costing, but this particular calculation I will just hold and do it for you when the question poses itself. At the present moment, with the understanding of this concept that I just shared with you, we are in the position to solve MCQ number 4. MCQ number 4 asks us that assume that the beginning inventory is 0, meaning they are saying your opening stock is 0. The company produces more units than it sells. So let us say, for example, by using the same sum, our production is 10,000 and our sale, let us say, is of 9,500 units. Obviously, my closing stock is going to be 500 units. Net income will be shown as being higher over where? In this scenario, if we take a closer look at our cheat code, the profit under absorption costing is going to be higher than the profit under direct or marginal costing. So I'm writing over here that when the closing stock is greater than opening stock, the profit under absorption costing is greater than the profit under marginal costing. This is a very important concept. Therefore, by the use of this logic and this concept, what will be the net income will be shown higher where? The net income will be higher both under absorption, they'll produce the same results. No. Under direct costing, no. None of the answer choice is correct, is absolute rubbish. Under absorption method format, the profit will be higher than marginal costing format. Marginal costing is also referred to as what? Direct costing. So with this, we all agree that our answer is option number D. Now, with this understanding, let's move ahead to the next question. Let's take a look at question 5. What does question number 5 say? Question number 5 says, Mill Corporation had the following unit costs for the recently concluded calendar year. Now, their manufacturing variable costs are 8 and their fixed manufacturing costs are 3. Their non-manufacturing variable costs are 2 and their non-manufacturing fixed costs are 5.5. The inventory for mill's sole product is 6,000 units on 1st of January and it is 5,200 units on December 31st. Over here, the first statement that I write only for the understanding of all my students is as follows. Let's please pay attention. We are at question number 5. What does question number 5 give us the data? Question number 5 says on January 1, that means this is my opening stock, is how many units? It is 6,000 units. And on on December 31, on what date? On December 31, that is my closing stock, it is 5,200 units. Now, please try to understand in this scenario that your opening stock is greater than your closing stock. In this particular scenario, what is going to happen? In this particular scenario, your profit under marginal costing is going to be higher than the profit under absorption costing. Now the question that we have to ask ourselves is, by what amount is this profit higher? So first of all, we have to make a basic calculation. The basic calculation is very simple. Take the difference between the inventories. Over here, since opening stock is greater than closing stock, I know that my profit under marginal costing is greater than my profit under absorption costing. Take the difference between the inventory. What do I take? I take the difference in inventory. My difference in inventory is nothing but 6,000 minus 5,200. And I multiply this by the fixed manufacturing overheads. How much are my fixed manufacturing overheads in this question? they are $3. So I just write down over here $3. So this is going to be 800 multiplied by 3, which is $2,400. Where is the profit higher? The profit is higher under marginal costing. Therefore, the profit under direct costing, which is nothing but marginal costing, is $2,400 higher if compared to absorption costing. That's your answer right here. And what does the answer say? Absorption costing profit. Obviously, I can see costing, marginal costing profit is higher. So, obviously, absorption costing income is $2,400 lower. It is $2,400 lower. Let us look at the other options to understand how they can confuse us in the exam. See, they are using the word over here 6,800. How did they come to 6,800? One may wonder. See, to come to 6,800, it is 800 multiplied by some random voodoo number that they have taken. So 6,800 does not make any sense. You have to understand that it is closing stock minus opening stock, or opening stock minus closing stock, however is the case, that you have to multiply by your fixed manufacturing overheads. Therefore, your absorption costing here is showing you a lower profit of 2,400. Right? 2,400 higher is wrong. This is given to confuse you. The other options you should not even be looking at from the perspective of your US CMA exams. So your answer for this particular question, for your question number 5, is your option number A. Let's go to the next question, question number 6. Question number 6 happens to be a very interesting and a rather, I would say, large question. It is, in my opinion, a high value MCQ. What is the meaning of high value MCQ? Iska weightage compared to your other MCQs is going to be more. Let us see what they want. Superflight expects the April sales of its deluxe model airplane, the C-14, to be 4,02,000 units at $11 each. Each C-14 requires 3 purchased components. What are the components? They need A9, B6 and D28. So, to make C14, I need A9, D6, B6 and D28. The first chart only for understanding. Is for making 1 unit of C14. What do I require? I require 1 unit of A9. I require 2 units of B6 and I require 3 units of D28. Please try to understand this particular concept. Now let's read ahead. Factory direct labor and variable overheads per unit of C14 are a total of $3. Fixed factory overheads is 1 per unit. Please try to understand. Factory direct labor and variable overhead means your total variable manufacturing overhead is equal to $3, and fixed factory overhead means your fixed manufacturing overhead is equal to $1. So if I was to look under absorption costing, the cost of production is $4 per unit. Let's go ahead. Superflight, at a unit production level of how many? 5 lakh units. So please try to understand, at a production unit level of 5 lakhs, fixed factory overhead is 1 per unit. It clearly shows you that your fixed budgeted factory costs are 5 lakhs. Now Superflight plans the following beginning and ending inventories for the month of April, and it uses the standard absorption costing method for valuing the inventory. Obviously, under absorption costing method, the inventory is going to be valued for the finished goods at the variable as well as the fixed manufacturing overheads. Here there are three costs to consider. First is the material cost that will go in making C14. Second is the labor and variable cost that goes. And the third is the fixed factory cost that goes. These three items you have to consider. And there is a question in our LMS which is concerned with this particular aspect. But now this particular question is not concerned with the valuation of closing stock. It's something else. It's asking you that assume that Superflight plans to manufacture 4 lakh units of C14 in April. The total April budget for all the purchase components should be what? Very simple question actually. See, please try to understand. The purchase of components, the purchase of the components will depend upon the manufacture of your finished goods. This is a very important concept over here. आप कितना इन्वेंट्री हाथ में रखोगे? जितना फाइनली फिनिश्ड गुड्स को मैन्युफैक्चर करना चाहोगे. फिनिश्ड गुड्स का मैन्युफैक्चरिंग ही डिक्टेट करेगा कि कितना रॉ मटेरियल आपको खरीदना है. तो पहला स्टेप होना चाहिए ये समझना कि आपका मैन्युफैक्चरिंग कितना होने वाला है आपके फिनिश्ड गुड्स का. तो समझने की कोशिश करो. योर मैन्युफैक्चर ऑफ फिनिश्ड गुड्स ओवर हियर इज 4 lakh यूनिट्स. So if I was to talk of 4 lakh units of your C14, please see what will happen. I am making 4 lakh units of C14. To make these 4 lakh units, I need 1 unit of A9 per unit. So I need how many A9? I need 4 lakh units of A9. How do I know this? It is given to me clearly in the question that to make 1 C14, I need 1 unit of A9. So obviously to make 4 lakh C14s, how many A9s will I need? I will need 4 lakh A9s. Next, I will take into consideration my B6. Now see over here how many B6 I need. I need 2 B6 to make 1 unit of C14. So I need 2 B6. So obviously to make 4 lakh C14, I need 8 lakh units of B6. 8 lakh units of B6. And the final item that I am looking at is D28. I need 3 units of D28 to make 1 unit of C14. Okay. I need 3 units of D28 to make 1 unit of C14. So to make 4 lakh units of C14, I obviously need 12 lakh units of D28. This is my requirement. What you can see in front of you is my requirement. It is not what I am going to purchase, it is what I require. Why? Because I already have with me a certain amount of units at the starting and a certain amount of units at the ending. So I use a very common sense based formula. I ask myself, what are my items? They are A9, they are B6 and they are D28. Now I have an opening stock of A9. How much opening stock do I have given to me on April 1st? Given to me when? On April 1st. I have 21,000 units of A9. I have 32,000 units of B6 and I have 14,000 units of D28. Now please try to understand. I am going to require or I am going to consume. I am going to do what? I am going to consume how many units of A9? I am going to consume 4 lakh units of A9. And finally, I am going to have with me a closing stock of how many units of A9? 9,000, 10,000 for B6 and 6,000 for D28. So here let me write down 9,000 for A9 and we'll draw a line over here so that none of us gets confused. 10,000 for B6 and 6,000 for D28. What does common sense say? Common sense says, sir, I will have an opening stock. Sir, to opening stock, I will add my purchase. Sir, these are going to be both my total units in hand. Sir, from this, I will subtract my consumption. And what will I be left with? I will be left with closing stock. What will I be left with? I will be left with closing stock. Therefore, opening stock plus purchase minus consumption is equal to closing stock. Therefore, can I say that purchase is equal to consumption plus closing stock minus my opening stock. Here, my dear friends, I have my consumption, I have my closing stock. Obviously, what am I looking for? I am looking for my purchase. What am I looking for? I am looking for my purchase. Now, let us please write down this equation so that we never forget it. Our purchase is equal to consumption plus closing stock minus the opening stock. Consumption plus closing stock is 4,09,000. So 4,09,000 minus 21,000 gives me 3,88,000 of purchase. My consumption for B6, I am going to consume how many units? 8 lakh units of B6. So I'll write down in my consumption over here 8 lakhs. My consumption plus my closing stock is 8,10,000. From that, I'll subtract 32,000. I will be left with 7,78,000. Next, with respect to D28, I'm going to consume 12 lakh units. So I'll write down 12 lakhs in my consumption over here. 12 lakh plus 6,000 is 12 lakh 6,000 minus 14,000 of opening stock gives me 11 lakhs and 92,000. Now, my dear students, they are asking you purchase budget. Please look into the question. You have been given the purchase cost of each of these items. Let us quickly make a relationship line over here for the purchase cost. The purchase cost of A9 is 0.50 per unit. So 388 multiplied by how much? 0.50 per unit. So how much am I going to spend on the purchase of A9? I am going to spend $1,94,000 to purchase what? A9. It's given here 0.50 per unit and 388 I need to purchase. Let's talk about B6. B6 costs 0.25 per unit. I need to purchase 778. So what is my total cost going to be? It's going to be 1,94,500. Next, let's talk about D28. D28 has a cost of 1 per unit. I need 11,92,000. Therefore, how much am I going to spend on this purchase? Obviously, I'm going to spend 11,92,000. So, what is my total cost going to be? It's 1,94,000 plus 1,94,500 plus 11,92,000. Let's quickly highlight this. This is going to be your total purchase, and the sum total of this is equal to, if you can quickly do it on your calculators, you will get the answer as 15,80,500. What is this? This is your purchase budget amount. What is this? This is your purchase budget amount. Let us look for 15,80,500 somewhere in our answers. It has to be there because I'm confident in our calculation. And here you go. The answer is option number A. The answer is option number A. This happens to be an important MCQ because of the sheer volume of how much calculation was needed. Can you do this quickly on a calculator with buttons? Obviously you can do it, but this lecture is your first revision lecture meant to teach you the concept as well as revise how to get it in a conceptual manner. So when we do the exam revision, we will do all of these things without writing so many notes. We will do it quickly fatafat on our calculator, but don't jump to doing that until and unless you have done everything peacefully and slowly first of all. Let us come to now question number 7. What does question number 7 ask us? Question number 7 asks us a straight question. When comparing absorption costing with variable costing, the difference in operating income can be explained by the difference between. Please try to understand that the difference when I talk about the difference in, they are talking about operating income. So difference in operating income under absorption costing and direct costing, that is marginal costing or variable costing, is equal to closing stock minus opening stock multiplied by fixed manufacturing overheads. Over here, please try to understand, there will be one partition that we create. If I am saying that my closing stock is greater than my opening stock, in this scenario, as you already know, my absorption profit will be greater than my marginal, that is variable or direct costing profit. But if we are to take this under consideration that my opening stock is greater than my closing stock, in this scenario, my marginal costing profit will be greater than my absorption costing profit. This is the concept that question number 7 is asking you. Now let us see how they are presenting the answer. Sir, in the answer they are asking us first units sold and units produced multiplied by unit sale price. No, it is closing stock minus opening stock multiplied by fixed manufacturing overhead. Sir, ending inventory in units, closing stock, and beginning inventory in units, opening stock, multiplied by unit sales price. This makes no sense. This makes no sense. This should be multiplied by what? By fixed manufacturing overheads. Ending inventory in units, closing stock, and beginning inventory in units, opening stock, multiplied by the budgeted fixed manufacturing overheads per unit. Yes, we have to add the term over here, per unit. What do we have to add over here, guys? We have to add over here per unit. They are budgeted on a per unit basis. So our answer is going to be option C. But let us look at option number D also, so that we are able to logically eliminate it. Units sold and units produced. No, they are not concerned with the difference in operating income under absorption and marginal. This has got to do with your inventory levels and your fixed manufacturing overheads. So that's your question number 7 for you. Guys, question number 8 promises to be a blockbuster question. Question number 8 promises to be a blockbuster question. But before that, before I go to question number 8, I would like to talk to you about the concept of question number 8. We need to pay attention to this particular point. We are talking about question number 8 of our LMS, but before that, we will do focus concept. We will do focus concept. All those of us who are stupid enough to say that, sir, only teach the MCQs. Without the concept, if you do the MCQs, even if you do 1 lakh crore MCQs, you will still go wrong because your concept is wrong. Make your concept absolutely strong, then you can do a million MCQs and they will all be correct because your concept is correct. Now, guys, please try to understand one clear and straightforward statement over here. Suppose if I say like this, that my closing stock is equal to 800 units and my opening stock is equal to 600 units and my fixed manufacturing overheads are given in the question as 4 per unit. In this scenario, since my closing stock is greater than my opening stock, please understand that my profit under absorption costing is greater than my profit under what? Under marginal costing. Now the question is, by how much? What is the question? By how much is the important question over here. The amount is equal to closing stock minus opening stock multiplied by fixed manufacturing overhead per unit. So here, what is my opening stock, please? Sorry, what is my closing stock? My closing stock is 800, and what's my opening stock? It's 600. And what's my fixed manufacturing overhead? My fixed manufacturing overhead here is 4. So here it is $800. What is $800? The profit under absorption costing is $800 more than direct costing, also known as marginal costing. This is the first item that you learned over here. Let us call this case A. Let us call this case A. Now guys, let us look at case B. My dear students, if I am in your place, I will pause the video, rewind it and copy down everything. Now I am saying that my closing stock is 1000 units, and I am saying that my opening stock now is 1500 units, and my fixed manufacturing overheads per unit, I'll continue to take it as 4. In this scenario, since the opening stock is greater than the closing stock, the profit under marginal costing will be higher than the profit under absorption costing. Then the question is by how much? By how much is a very simple question. It is opening stock minus closing stock multiplied by fixed manufacturing overhead. What is my opening stock? It is 1500. What is my closing stock? It is 1000. I multiply that by my fixed manufacturing overheads, which is 4. The answer is $2000. So how do I write this in a statement? Over here, the profit under marginal costing, that is direct costing or variable costing, is $2000 higher as compared to absorption costing. As compared to what? As compared to absorption costing. This was your case number B. Now let's come to your more interesting and more important case number C. Please try to understand the following statement. I am saying that the profit under absorption costing is 10,500, and the profit under direct, that is marginal costing, is 10,000. And I am saying that my fixed manufacturing overheads are $1 per unit. Please try to understand. You are supposed to read this and clearly understand in your head over here that since the profit under absorption costing is more than the profit under marginal costing, obviously the closing stock has to be higher than the opening stock. This is what you are supposed to link over here from your learning. Why? When the profit under absorption is more than the profit under marginal, your closing stock is greater than your opening stock. Now the question is by how much? By how much is a very simple answer. It is closing stock minus opening stock multiplied by fixed manufacturing overheads. So here this is multiplied by 1 and the answer is given to you. How much is the profit more? The profit is more by 500. So this is 500. I can see over here clearly that closing stock minus opening stock is equal to what? Is equal to 500. This is a very important piece of data for us. Why is this an important piece of data? Now please pay attention. My dear students, opening stock plus purchases minus consumption is equal to closing stock. Suppose if I was to say that my consumption is, let us hypothetically say 18,000 units, and just based on this data we are asking the question that what is your purchases. My dear students, please pay attention to this question all over again. Case C is most important. Case C is most important. What does case C say? Case C says that your profit under absorption costing is 10,500. Your profit under marginal costing is 10,000. Okay. Can I say that my profit under absorption is higher than my profit under marginal by 500? But my dear students, since my profit under absorption is greater than my profit under marginal costing, I can say that my closing stock is greater than my opening stock. Difference in profit under marginal and absorption, difference in profit under marginal and absorption is given to us by closing stock minus opening stock multiplied by fixed manufacturing overheads. So in our case, the difference in profit is 500. That is nothing but closing stock minus opening stock multiplied by fixed manufacturing overhead, which is 1. So if I was to look at this logic, can I say that my closing stock minus opening stock is equal to 500 over here? It's a basic arithmetic logic. Now I am saying that opening stock plus purchases minus consumption is equal to closing stock, and I've given you that consumption is 18,000. Therefore, can I say that opening stock plus purchases is equal to closing stock plus consumption? Can I go on further to say that purchase is equal to closing stock plus consumption minus opening stock? Let me write this like purchase is equal to closing stock minus opening stock plus consumption is equal to purchase, and I just calculated that closing stock minus opening stock is 500 and consumption is 18,000. Therefore, can I with your permission say that purchase is equal to 18,500 units? That's how we are able to calculate this very important piece of information by the use of case C, which is most important. At this point, I request all of the students to pause the recording and to sort of go back and read, refer case A, case B, and case C all over again. Please read, refer case A, case B, and case C all over again. And after that quick discussion, what are we now going to do? After that quick discussion, we are now going to embark upon our question number 8. Let's pay attention to question number 8. Mark this question as one of the most important questions in your LMS. This question has been derived from the US CMA exam support package, and today whatever study materials you must be referring to, Becker, Sargent, Gleim, Hawk, Wiley, Miley, Tiley, anything, this question is going to be there in all of them. But nowhere will you have this clarity of explanation of case A, case B, and case C. Let's take a look at question number 8. During the month of May, what has happened? During the month of May, Robinson Corporation has a sales of 1,000 units. The cost per unit for May has been given to you as follows. Direct material variable 5.5 per unit. Direct labor variable 3 per unit. Variable manufacturing overhead variable 1 per unit. Fixed manufacturing overhead 1.5 per unit. Very important data. Variable administrative cost not a part of cost of production, not a part of product cost, they are a period cost. Variable administrative costs are a period cost under both absorption and marginal, and fixed administrative costs are also a period cost under both absorption and marginal. Now this is my total cost. Now May's income using absorption costing is 9,500. And the income for May variable, that is marginal costing, would have been 9125. Sir, pause the question right here. Sir, pause the question right here. Can I, with your permission, write down the following data? That profit under absorption costing is equal to 9,500 and profit under marginal costing is equal to 9125. With your permission, can I say that? With your permission, can I say that profit under absorption costing is greater than profit under marginal costing by $375. The moment I say that profit under absorption costing is greater than profit under marginal costing, I know that closing stock is greater than my opening stock. Then the question arises in the minds of everybody, by how much is the profit going to be more? The answer is it is more by 375. How to calculate? Sir, it is closing stock minus opening stock multiplied by fixed manufacturing overhead. What is this equal to? This is equal to difference in profit. What is this equal to? This is equal to difference in profit. Therefore, can I say that closing stock minus opening stock multiplied by fixed manufacturing overhead of 1.5 is equal to difference in profit of 375. Therefore, can I say that closing stock minus opening stock is 375 upon 1.5. Therefore, can I say that closing stock minus opening stock is equal to 250 units. How 250? 375 divided by 1.5. Now, what they are saying ahead in the question, the number of units that Robinson produced during May. Now, hold on, guys. Hold on, guys. They are asking you how many units did they produce. They are asking you how many units did they produce. Guys, please try to understand. Please try to understand. Opening stock plus your production minus your sale is equal to your closing stock. Therefore, can I write like this, that opening stock plus production minus sale is equal to closing stock. Therefore, can I write opening stock plus production is equal to closing stock plus sale. Therefore, in this equation, can I write that production is equal to closing stock plus sale. Now, opening stock grows on that side minus your opening stock. So I've written OP here and I've written OS there. So opening stock, we will use the short form as OS only. We use the short form as OS only. Therefore, can I say that production is nothing but closing stock minus opening stock plus your sale. Therefore, can I say that production is equal to, now what is closing stock minus opening stock? I already calculated the answer to be how much? 250. So I'll write down over here 250. And in the question, if I'm not mistaken, they have to give me the sales data, and they have given me that you have sold 1,000 units. So I'll write over here plus 1,000. Therefore, automatically my production answer is 1250 units. What is my production answer? A production answer automatically is 1250 units. And let us look for the answer over here. 1250 is option number B. And this ultra important MCQ has been discussed by you. I request that you pause. I request that you go back and copy down. This is by far one of the most important questions you are going to have in this particular topic. Please make sure that case ABC that was discussed in focused concept part has been written down by you and that you have understood it absolutely well. We now move over to question number 9.